Markets looking like today?
Markets are actually looking pretty subdued in trade. Happy New Year to you.
Happy New Year to you too.
And Happy New Year to all of our viewers who tuned in. And yes, let's not jinx it, yeah. Very rarely we get holiday after holiday, and I think none of us are actually depressed or disappointed about it. But yes, it's Thursday, and today the markets are looking pretty subdued. We did start on a very positive note. From there on, we drifted slightly lower, but nevertheless holding on to gains of above 0.4% as we speak. 0.5% uptick coming in for the Nifty Bank as well. Let's take a look at the gainers on the Nifty at this juncture. It is the metal pack that is actually buzzing in trade. JSW Steel, Hindalco, Tata Steel, all of them are top Nifty gainers as we speak. On the flip side is Bajaj Finance, Maruti Suzuki, Asian Paints, Bajaj Finserv that are declining in trade. Let's take a check of what are the sectoral indices doing in trade, and all the sectoral indices are in the positive territory today, barring IT index, which is trading absolutely flat with a negative bias. But on the surface, all the sectors are in the positive, and metals, no doubt, they are the one that is shining bright in trade today. If the metal sector, that is trading high about 2.4% as we speak, and that is the top sectoral gainer, followed by realty index, power index, oil and gas, all of them seeing good strength in today's trading session. Certain names to highlight today. Check what is happening with RBL Bank. A sharp uptick coming in on RBL Bank, an uptick of approximately 7 to 8%, or now 9.5% uptick coming in for RBL Bank. The other counter that you need to watch out for is Gland Pharma. That's the one that's reacting to its earnings, and a sharp downtick coming in on that one, down approximately 15% as we speak. Apart from that, take a look at what is happening to NMDC. Remember, the NMDC has listed, it's actually gone ex-steel business. So you have NMDC that's trading at around 106 levels as we speak. So these are some of the counters to watch out for. But yes, the one that we are going to definitely talk about in today's trading session will be Dabur, Adiraj, because Dabur is a company that is in focus one on back of its earnings. But that's not the reason why we're going to talk about Dabur, isn't it?
Right. Thank you, Cheryl. Now, Dabur India has signed a definitive transaction agreement to acquire 51% shareholding of Badsha Masala, making a foray into the ground and blending spices and seasoning space. Dabur is acquiring the stake in Badsha for nearly rupees 588 crore. Let's bring in board my colleague Vinny to give us all the details. Vinny?
Absolutely, it's just a 587 crore initial buyout that they're doing, a 51% stake for Badsha Masala, and overall the enterprise value is 1,152 crore of Badsha Enterprises, and they will be paying that remaining amount over a period of 5 years. So they are acquiring the 100%, but 49% will be acquired over a period of 5 years. Right now it's just this 51%. Now obviously, what does this indicate for Dabur? Because this is a foray coming into the spices market, the seasoning market, which is a 25,000 crore market, which is seeing a good growth coming in as well. Overall, the market is also seeing a good growth at this rate over here. So that is why it's almost growing at 14% almost CAGR when you look at it. So that is what one is keeping an eye out on, because this is a new foray coming in for Dabur. This is their strategy to grow their food business even more further. And even more, what will happen with Badsha Masala acquisition. The revenue multiple for Badsha Masala is 4.5 times FY22, FY23 estimates, while EBITDA multiple is 19.6 times. So maybe, this will add some value coming into Dabur as well. And overall, they will be intending to leverage the international business of Badsha Masala as well. And this acquisition will help them further grow their food business, which they have strategized for a long, long time.
Thank you so much for that, Vinny. But let me bring on board our expert for today. We'll have Kunal Bothra joining us shortly. And along with Kunal Bothra, we have Rajesh Agarwal joining us this morning. A very good morning to you, Rajesh. A very happy Diwali, as well as a happy New Year to you and all of your all of your clients, as well as your team.
Thank you, Cheryl. Thank you, Adiraj. We wish the entire team of ET Now and our viewers a very happy Diwali and a prosperous New Year. I seriously believe that everyone's portfolio, everyone's demat account be in green for the entire year, and everybody means lots of money with the help of ET Now, of course. This is my wish for the entire investing community.
this is the pledge for all of our investors as well to see their portfolio in the positive territory, in the green through the course of the year. But let's talk about Dabur, Rajesh. And yes, I can't stop actually playing that jingle non-stop in my head of Badsha Masala. But how big an acquisition this is for Dabur, and this brand has a huge recall value as well.
You said it right, Cyril. The moment I heard about this Badsha Masala thing from Dabur, the jingle came into mind, Badsha Masale type. So yes, I remember it right. As far as the company is concerned, this acquisition of Badsha, buying 51% stake in 588 crore and 49% stake in the next 5 years, is somehow positive because it allows Dabur entry into the kitchen segment with spices and condiments. Of course, it was there in kitchen, but this would be a bigger entry into that. And it's a 25,000 crore market of spices. And I think Dabur is going to do well in masala because with the backing of kind of distribution network, with the kind of money, with the kind of ad spend they are going to do, I think this brand is going to rise like anything. But when we look at the numbers were nothing great to talk about. The results were in line. Inflationary pressures were there on raw material cost, and going forward also that could hurt the margins. We saw margins falling from 26% to 24%. Revenue rose by 6%. And let me add to this that there were lower ad spends, which has offset the gross margin pressure. Otherwise, it has been much higher. Going forward too, I think that this sharp slowdown in rural demand and increased competition, along with inflationary pressure, could play a spoil spot in the near future. But with 95% gain across portfolio, I think this acquisition is going to do well for food business. Only negatives are weak rural demand, and that I think would be taken care of in the next 1 or 2 quarters. At this point of time, valuations are also not that great, trading at a PE of 55. We have a neutral rating, unless, of course, the management clarifies something in today's management call. The biggest point would be, we would be looking after would be what the management says on the rural demand, on the inflationary pressure. These are the 2 things. Otherwise, at this point of time, we have a neutral rating.
Let me come in here, Rajesh. Thank you so much for that. But good morning, Kunal. The same question to you also. Dabur is acquiring Badsha Masala. What's your perspective on the same?
So short-term wise, there are no major triggers into the stock price. I think it's just lifted off from 520 to 540, 545. A very meager kind of returns in the last 2 weeks for this FMCG stock. But then when I try and compare this with the previous major highs, I think 640 was the previous high for Dabur, and the more recent high was just around the 600 mark. So on the long-term charts, it's been making lower highs for itself, and the very short-term charts, there's been a mild bounce into the stock price. It doesn't change the trend as such for the stock. I would expect a broader consolidation, maybe 500 as a broad base for the stock price, and closer to 580, 600 as a major resistance, at least over the near term.
All right, so that's the view coming in from Kunal as well on Dabur. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. But when we come back, we will be back with our experts and your queries, so don't go anywhere. Hello and welcome. You watch.
Kichunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire
What
case.
is it going to mean for the business?
What else are you looking at?
This is clearly one of the biggest deals.
ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investment.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and this is the show that we take all of your stock-related queries and get them answered by our experts. And today our experts are Kunal Bothra as well as Rajesh Agarwal. But before I get started with the queries, Rajesh, we are in the brand new Samvat, and yes, everyone's hoping that the volatility is much less than we saw in Samvat 2078. But given the volatility, given how the global circumstances keep changing day in and day out, how can retail investors protect their wealth?
See, there are a lot of things, but since this is a Diwali season, so I would like to add something with the flavor of the season, I would say. In Diwali, generally, what happens? People worship Ganesh and Lakshmi. I would suggest them to worship Saraswati with Ganesh and Lakshmi also. Because when you are putting Lakshmi, that's money in stocks, you should have something with Saraswati, whether it is fundamental or a technical analysis of the stocks which you are buying. So do your own research. Don't believe in tips. Don't believe in WhatsApp forwards. Go with research. It's your money after all, and you should do some research before putting in some money.
Absolutely. So that's a very sound advice coming in from Rajesh, and with the Diwali flavor in it. But yes, the crux of all of that is that make sure you do your research. You may do sound advice when it comes to your investment. Do not follow tips, and especially WhatsApp forward when it comes to investing in the market. But let's get started with the queries then. And yes, for those who are tuning in for the first time, like I mentioned, this is the show that we take all of your stock-related queries. So we are live on YouTube, Facebook, as well as Twitter. You can write into us on those platforms, as well as you can write into us on our WhatsApp number that will be flashing on the top of your screen very shortly. Do mention the stock name that you are asking query on, the time horizon. If you already invested, then do mention the quantity and the buy price as well. So let's get started with the first query. That's coming in from Mr. Surana, and he wants to know about Tata Elxsi, Kunal, and Gland Pharma as well. Now he wants to know whether he can buy both of them with a short-term view for a swing trade, because he believes that these two have corrected a lot from their upper levels. Do you think it's a good strategy to adopt for the short term for swing trade, Tata Elxsi and Gland Pharma?
See, I think both these stocks are completely different in terms of charts. Tata Elxsi had done fabulously well, and after rallying up for almost 2 years, giving phenomenal returns in that time span from 2020 low specifically, the stock is going through a correction for the first time, I think in the last 2 or 3 months. Now the correction is getting a bit more aggravated for Tata Elxsi, but then it still would probably be a long distance away from any kind of a major mean reversion from the long-term chart. So I would suggest a wait out for Tata Elxsi. For Gland Pharma, it would be interesting, because I think after this kind of a recent sell-off, or today's sell-off specifically, the stock had already gone through a correction from 4,300 to now sub 1,200 levels, sub 2,000 levels for Gland Pharma, which means the correction is already more than 50%, 60% into the stock price. So I believe that this could probably be a good opportunity to try and chip into these names, for Gland Pharma. But for Tata Elxsi, I would suggest a wait.
Right, coming to you, Kunal. Jay Kishan's writing from Gwalior, bought 100 shares in Natco Pharma at 640, and he is suffering heavy losses. He's asking for your advice. What should he do?
See, I would suggest to wait out now and understand that Natco Pharma is a stock which is struggling to lift off to any major kind of a trend. But, purely on the short-term charts, the last 2 to 3 months, the stock has been taking good support. So, the lows which the stock is making is relatively very shallow as compared to the previous trends, at least over the previous years, where the stock had been correcting very sharply. So which means that the stock is trying to build in a base just around the 600 mark for itself. So I would suggest to hold on for the stock, not to add at current levels, because if the stock consolidates for another 2 to 3 months, you would be having more of an opportunity loss over here. So would suggest to wait out for Natco Pharma and hold on to the existing quantity which you have.
Okay, this one is coming in from Akash Mathur, and he is asking for the long-term gains and higher gains in long-term. He's directed this question to Kunal, but I will take it to you, Rajesh. Now, he wants to know between Indian Hotels, Trent and Titan, can he expect bigger, longer-term gains out of these three? Which one would that counter be? Or should he look at capital goods stocks in altogether? So what's your take? These are all three are Titan, all three are Tata Group stocks, as Indian Hotels, Trent, as well as Titan. Should he look at these three counters, or should he look at cap good space?
See, all three are good companies from the Tata stable: Titan, Indian Hotels, and Trent. Trent has run up quite a lot. It may go for some amount of consolidation, but still some steam is left. Titan is doing well. The brands are doing well. They have recently moved into Tanera. That's a clothing thing. And that we believe is going to give good numbers in going forward. But out of the three, if I have to choose, I will go with Indian Hotels. We have seen revenge travel going up by anything. Average room rents have gone up. There are no vacancies as such. And with the kind of brand Indian Hotel has, Taj brands, I think it's still trading much below its intrinsic value. There's a lot of steam left. Out of three, if I have to choose, I will go with Indian Hotels.
All right, out of the 3, Indian Hotels is what Rajesh would pick on. But remember that big acquisition that Dabur has taken, planning to acquire stake in Badsha Masala. You have the management addressing in a con call. Let's listen to what they have to say.
Large market. I think the first pivot of our winning is that the market sizes where we enter should be scalable enough, and there should be enough room for us to grow. And with that kind of a market size, there is room for multiple organized players to come in and gain market shares. And this market is essentially unorganized. So there's a lot of room to get converted from unorganized to organized, from organized also to big branded players. So enough room for everybody to play. And this is a very, should I say, state-by-state market growth which one needs to follow. So we are starting from Maharashtra and Gujarat, and then we will extend this portfolio going forward. And we feel that there is a brand equity here which can be harnessed and can be plowed. As far as the growth not being there in past decade or so, around 4-5% of CAGR, I think there were issues within the family, and that's why the growth were not there. The family was little divided on the investments to be put behind the brand, and there hardly was any investment put behind the brand. But the jingle of Badsha still resonates very well. As far as margins are concerned, to your second point, Abneesh, the margins are accretive. Whether it's a gross margin or operating margin, is accretive to our foods portfolio margins, and this will only add on and improve our margins in the food segment where we guys operate with essentially beverage portfolio. We have a vision to extend our beverage portfolio to a food and beverage portfolio, and this is an attempt in that direction to become a completely food and beverage company rather than being only a beverage play. We have a 70% market share in the beverage play, but we want to extend this to the food segment. As far as cash EPS is concerned, do you want to take up?
Yeah, Abneesh. No, thanks for that question. But what we mean by this is that profit after tax, net of the interest opportunity cost, will be accretive from the first 2 years, and without taking into account the brand amortization, which will come subsequently. But cash EPS will definitely be accretive in the first 2 years. Yeah, and going forward.
And Mohit, on the question of the distribution scale-up, because you said only few states Badsha is present, will your plan be to first focus on these key states, or you want to first take pan-India presence?
No, not really. So we have a very focused strategy on this. So in first stage, we will focus on Gujarat, Maharashtra and Telangana. That is the key core states. In the second phase, we will focus on the adjoining adjacent states, which is Rajasthan, and subsequently we will look at scaling it up to all India where Dabur has a presence. So first, that is the geography-wise play. As far as the distribution play is concerned, we have got a distribution to roughly around 80,000 outlets, whereas Dabur has a much huger scale of distribution, whether it's direct or it's indirect, in both urban and rural. I think that within these states will be strengthened before we move on to the adjacent states and then subsequently to the rest of India. But for rest of India, as you know, this is very specific to the palate, likings and preference-driven category. So we will have to create a back-end and create flavors which are in tune with the preferences and the taste of the consumers in other geographies also. So that scale-up will happen in due course of time.
That's all from my
of Dabur, talking about that recent acquisition, that is the Badsha Masala acquisition, saying that the spices is a very lucrative and sizable market, and the acquisition is margin accretive for the foods category of Dabur. He's also said that they will be focusing on Maharashtra, Gujarat, Telangana in the first phase of scaling up of Badsha Masala. But on that note, we slip into a break on this edition of Buy Now, Sell Now. But when we come back, we'll continue taking your stock queries, so don't go anywhere.
Next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty Bank Index is
Buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free. When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue with our queries very quickly then. And the next one is coming from Vinita Mathur, and she has 272 shares of Cabra Extrusion at 429. Can either of the experts advise on what should I do with the stock, because she is very new to investing? So given that she's new to investing, Rajesh, what's your take on Cabra Extrusion?
See, it's a very long-term play, I would say. In the short term, nothing is going to happen. The numbers are okay. I won't say that are good or bad, but that are okay types. And the most important point is the investor is new to investing, and she should not go for such kind of mid-cap or small-cap names. To start with, one should focus on large-cap names. I would say switch to some private sector banking space like a Kotak Bank or ICICI Bank could be a better choice, or even a Reliance could be a better choice than Cabra Extrusion.
Staying with you, Rajesh, Prakash is writing to us from Kerala. I'm sorry for the mix-up. He's directed this question especially towards you. He's holding EIH at 192. He's asking whether he should switch to Indian hotels or stay on with EIH.
Equally good. I won't say that EIH is better or Indian hotels are better because both are actually good. Travel and tourism industry has taken off with revenge travel. Everybody has got room rates going up or the occupancy is going high, and both of them are quite keen on aggressively going for acquisition or expanding their rooms. So I would say EIH also is better bet. You can stick to that.
Satya Kunal, this one is for you. IndusInd Bank, he's holding 600 shares at a price of 1,145 rupees per share. He wants to know at what price he can add Asian Paints. So I think he wants to know about IndusInd Bank. What should he do with his holding? I think last time he asked was whether he could average right now or no.
So I think I had mentioned specifically that 1080 or sub 1100 could be a good point to try and average the stock. I think if I'm not wrong, on Tuesday when the stock had come back towards 1120 mark, there was a bit of a demand which had come back into the stock price, and you saw a minor bounce coming back into IndusInd Bank. So you have to wait out for a point where there is a consistent tapping into a demand zone. That's going to be a good level to buy or average IndusInd Bank. So if you've already bought, then I would believe 1080 to 1100 could be a good averaging opportunity point.
Right. Rajesh, Divya is writing to us from Bangalore. She's holding Titan 2,298, looking to invest more for mid or long term. Can she add more quantities at this point to the same?
See, for a longer term horizon, yes, it's a good buy, I would say. Short term, it's difficult to say, but long term is quite good. Their watch business is doing well. Jewelry has done exceedingly well. They are moving into clothing. The glasses business is also doing well. All in all, I would say the brands are doing better. They have a large number of stores. Numbers were not that good, but still going forward, we think that the numbers can be phenomenal. I think one can definitely add on dips for Titan.
Also is coming your way, Rajesh. This one's come from Nino, and he's holding Tech Mahindra, about 100 shares at a price of 1,300 rupees per share. Now he wants to know what is the long-term outlook for Tech Mahindra.
Long term is very bright, I would say. With the launch of 5G and all, I think this is one of the companies that is going to be benefited because they provide telecom software, and with the kind of tie-up with BT and all, I think this can give very good returns in the longer term horizon. For a 12 to 18 months horizon, it's a buy from our side.
Right. Again, this one's for you as well, Rajesh. Suresh Kumar is writing from Hyderabad, holding 3,000 stocks of Alok Industries bought at rupees 25 a year ago. He's asking for your viewpoint on this firstly, and also asking any hope for the same for another year. He's a long-term investor, of course.
See, I don't think there is any hope for this stock in the long term. The only positive point is somewhat holdings of Reliance Industries. Otherwise, the numbers are not that good, and I don't think something would happen in the near future. It's better to avoid such kind of stocks.
There are actually a lot of long-term queries actually, Rajesh. Looks like it's new somewhat, so people are making new investments and preparing for the longer term, looks like it. But let me take this one for you, Kunal. I found one for you. This one is from Tansen. He's writing to us from Kochi. Canfin Homes, 41 shares at the price of around 478 rupees per share. Now he wants to know whether he should go ahead, book profits or hold on to Canfin Homes.
See, I would suggest to book out profits over here because the recent sell-off in the month of September from the 675-80 levels for Canfin Homes, the stock had fallen towards almost 450 or sub 450 levels. A sharp 225 point odd correction for Canfin Home, and now you've seen a bounce back of almost, I think, 80 rupees, 90 rupees from those levels. So I think it's a good retracement. The stock has already completed. It's still below its 200-day moving average. That is the only reason why I would believe that maybe this rally could fizzle out very quickly. So if you are sitting on good trading profits, I think it's time to book out.
Right, this one's for you, Kunal. Amit Kumar is writing to us, 200 shares of Adani Wilmar at the level of 800. At the level of 800, want to average the stock, please suggest the levels to average at.
See, I think if you're looking to average specifically, then I would believe that potentially 650 or below could be a point to average. I think last week or so, the stock had a touch and go movement towards 650 mark on closing basis. 654 was the low the stock had made on in terms of closing. So I think that 650 mark seems to be a good zone where you can look to average.
All right, this one is coming from Soumitra Joshi, and this one is for you, Rajesh. With Alphabet, Meta and Snap reporting drop in their ad revenues, do you think that Apple also will see a hit? And if so, then if you could give him some sort of your analysis or your take on it.
And which stock?
Apple India.
Apple India, right. I think it's quite run up quite a lot. Valuations are on a higher side, although the long term is very good. But in the short term, we believe that some kind of correction is overdue. So if you have a short term position, I would say to at least sell at this point of time and buy at lower levels. But for a longer term horizon, it's a good stock.
Right. Now, Shailesh is writing to us from Tirupati. This one's for you again, Rajesh. Holding Ether Industries, 840 for medium to long term, wants to add more shares or is asking whether he should hold or should exit.
I couldn't get the name, Raj.
Oh, Ether Industries.
Sorry?
Ether Industries.
Okay. Yeah, it's a very good stock, I would say. The numbers have been good. It's doing very well. The order book is good. It's a good bet for a long term. I would say add on dips.
Rajesh, see, this one I've got from Aditya, and he wants entry levels for DVs and Laurus Labs for the longer term. He's saying that also he wants to know if they are the best picks in the pharma pack, and if not, then which one should he look to invest in the pharma stocks? Given the fact that DVs and Laurus have seen a huge drop from their highs on back of what's happened with their earnings commentary, do you think that it's advisable to look at them afresh now for investment, or some other pharma names makes the cut?
Is it for me?
Yes, for you, Rajesh.
Yeah, Laurus looks good. The kind of cut it has seen, despite the fact that the numbers were not that bad, I think this can give good returns, provided you have a 12 to 18 month horizon. API business is doing well. They are moving into new territories. Laurus looks a better bet, but in pharma space, I would say the best bet would be Cipla or a Dr. Reddy's lab. They are two good bets. In a MNC pharma, Pfizer can be kept in a portfolio, but that is a low liquidity stock.
Right, so that's the take coming in on the pharma pack, and Cipla looks the best. Laurus also looks nice, is what Rajesh is saying. But with that, let's kickstart with a rapid fire then, and let's take as many as we can. Shobna has written to us on Havells. Kunal, it's dropped 20% last 2 months. Good time to enter the stock now?
Not really, I would suggest to avoid.
Right, Kunal, GM Reddy from Bangalore, 4,000 shares of Motherson Sumi at the rate of ₹70. What should he do, exit or average?
I think you should look to hold on at least as of now.
Another your way, Kunal. Ajay is asking a good entry point for Astral Poly with a 1 year's view.
Well, I would suggest to hold on to the stock.
Rajesh Prachi Jain from Indore purchased HUL shares 2,642 at the stock price. The stock price has fallen to 2,509. Long-term perspective, what should she do?
Hold. It's a hold. The numbers have been good. Portfolio is good. Hold.
Okay, Madhuri wants to know if power is a good sector to invest in medium term, and if so, then two good names in the power space to invest in. Rajesh?
Power is, of course, a good stock. Two good names would be CESC and Tata Power. Both can give good returns.
Kunal MVS Rao, writing from Hyderabad, has 650 shares at 290 of HDFC Life. Hold or sell?
I would suggest to hold on.
Okay, Jay Krishnan wants to know, Kunal, Nifty Bank call option to buy today for November monthly expiry.
Not really, I would suggest to avoid.
Right. Okay. Sandeep is writing from Tamil Nadu. His wife is holding LT, LNT, HDFC, RIL, TCS, Ultratech, ITC and Sun Pharma. He's asking what's the missing sector or stock that can be added to this portfolio. He wants a view to 4 to 5 years. Kunal?
Well, I think you've named most of the large cap names. I'm not sure which one is missing, but then I think from the IT pack, I would probably sense maybe Infosys or TCS is something which is missing.
All right, this one is coming from Abhijit. Kunal, Canara Bank 217. Should he enter? Should he book profits and re-enter?
Well, yes, you can look to book profits over here at 290 levels and look to buy back at even a 5% drop.
Right, Rajesh Sudhir from Bangalore, 30 shares of Alkyl Alamid at 3,420. Can he hold for 2 years?
Yes, he can hold, even if wants to add. Balaji Amines could be a better bet.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Rajesh, as well as Kunal, for joining us on the show, giving us your take on Dabur, as well as resolving viewer queries. And viewers, yes, if you've not taken your queries today, we will be back tomorrow, so do write in to us. But for now, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, we have a management interaction coming up on the other side.
And get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch markets at noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
Here, ET Now, I've been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And as promised, we are back with a management interaction. We have the management of IRB Infra, and the management is joining us on back of their Q2 numbers. Just a quick snapshot of the number. They've posted a good set of numbers, and this was supported by decent uptick in traffic volumes. The construction revenue, however, remained weak on a year-on-year basis, and the ordering was also muted. But what else are they expecting for the year? For the year ahead, we have Mr. Tushar Kevadia, who's a Group CFO at IRB Infra, joining us. A very good afternoon to you, good morning to you. Thank you so much for joining us on ET Now. And let's talk about the quarter gone by. It's a decent set of earnings that you reported for the quarter gone by, with toll revenue rising about 17% on improved traffic. However, if you see your EPC revenue, that fell 12% due to monsoon. Will we actually see the EPC segment revenue rise in Q3? And also, what sort of a growth outlook and revenue growth guidance that you have only for EPC business in particular?
So, yes, you are right. Our toll collections have witnessed a robust growth on basis. And on a construction front, there is slight delay in achieving the appointed date for one of the project, that is Ganga Expressway SPV. Now we have already achieved the appointed date. In Q3 and Q4, we will see the uptake in the construction segment as well. And we will catch up whatever backlog was there due to delay in achieving the appointed date.
Right, a very good morning. Adira joining in here. Another important question I would like to ask you is that, in our last interview, the management had given the financial year 23 guidance for 15 to 16% revenue growth. With pickup in the infra activities post-monsoon, will you be upping this guidance on a consolidated basis?
On a yearly basis, we are on track to cover up the construction revenue, which should be in the range of 4,500 crore net of GST. This is in line with our estimated revenue on the construction front for the full year basis. Toll collections are continuing witnessing a good growth even for the third quarter, with festive season around already, and this momentum is still continuing. We are expecting a toll collection to achieve a growth of almost 20 to 21% for the full year basis.
Right. Now that the construction for Ganga Expressway is underway, what kind of revenue potential can we expect from this project? Also, suggested an important future timeline also for the completion of this project that you're seeing?
Ganga Expressway SPV, the project has already received the appointed date on 12th October. The project is already geared up for the execution. The Q3, Q4 numbers will see the project contributing to the construction revenue. This project is almost having a order book of more than 5,000 crores for us. We are confident to execute the project in next 2.5 to 3 years. We have already successfully completed the first tranche of equity raise for this particular SPV, wherein GIC, having 49% share, has already contributed 261 crores as a first tranche for the equity contribution. And we are already prepared with all the preliminary works completed on this project towards the resource mobilization.
Right. Also, sir, margins have remained strong across the EPC and the BOT segments, with supply chains issues easing and lowering on commodity costs. Will we see margins being maintained above 50% mark in the coming quarters?
Yeah, that's right. We are witnessing a declining trend in the major materials for us, that is bitumen and steel. With that kind of declining trend, our EPC margins have also improved for the quarter, and on a full console basis, we expect the EPC margins to remain